Hi guys, how are we doing? Okay guys, tonight we're going to look at new industry. It's kind of partly related to retail in any way, but we haven't discussed it earlier. It's automotive industry. And we specifically are going to look at the company which called Raspberry Automotive Group Inc. Okay, and the ticker is ABG. First of all, disclaimer. Remember that it is masterclass and it's educational purpose. Even though we discuss good company, you still have to take into consideration all your financial situation before you make any investment decisions. And strategy we'll discuss tonight. You have to choose whatever it is suitable for you or not based on your personal circumstances. Okay, guys, put plus that you understand this part, so that you invest your own money and you have to make your own decisions. All right. Okay, so plan for today. So first of all, we're going to look at current market situation. As always, we're going to look at indexes and then trying to understand what we can expect within next few weeks. Then we'll look at pros and cons of investing in retail automotive industry, and then already specifically we're going to analyze ABG. Okay, we are going to look fundamentally and technically. All right, and then we are going to develop few possible trading or investing strategies, and then whatever news we have, so you will hear about them as well. Okay, perfect. So that's Dow Jones. As we can see from 2009, okay, it's constantly moving up. It's already what? 7 years, 9 years practically, right? So it's constantly moving up. And at the moment, we could see it's on a fast line territory. So it was a slow line territory in 2011 and last year as well. So it's kind of was in a low part of this trend. And at the moment, we can see it's closer to the resistance level. Okay, 21,528. It's the highest. Last night was again the highest high in the whole history of this index. Okay, now it would be normally to expect if it slow down here at resistance and maybe to pull back a bit, okay, to this level. If it stays in the upper line and maybe to go back higher, or if it breaks through, it's quite normally again to see it if it goes back to around 19,000, sorry, to this level. But you have to understand that it's about 10% drop. So even if index goes 10% lower, it still will be in the uptrend territory. So that's why, but it definitely will give us an amazing opportunity to get some good companies on a bargain price, because similar situation happened in 2016. It's happened in 2015 a couple of times. So we used it quite well. So if something like that happened, so you have to be prepared. You have to have some companies on your list, which you are planning to buy. Maybe they're not the perfect right now, but in the price level. So, but you could use this situation in order to get them. Okay. So that's Dow Jones long term, and that's what we can see in the shorter period. It's daily graphic. So that's what the top line. So we can see this is the line which represents the resistance level for the trend which goes from 2009. We can see we're really, really close to it. So it still can go a bit more slightly, and then quite easily it can go back to this level or even lower. Okay, so that's why when we look at this, we can see it's pretty high. And if you're considering to enter any position, you have to think twice, because even company is undervalued, and the company itself, which you see, it's at support, and everything shows that it's going to go up. But looking at the indexes, if index goes down, it might drag with it all the rest, and your company as well. So you can buy it even cheaper than it is now. All right, so that's what we can see with Dow Jones. If we look at CCP, it's very similar situation. Also, the CP 500, we can see it's at the highest high. The only difference is it doesn't go all the way to the resistance level. So here, so it's quite a distance here yet. So there is a room to grow. And actually, if you notice it, for the last few months from March, it's kind of was doing parallel trends. Okay, so it did 1, 2, and 3, and now it's kind of broke through this territory. Similar situation was with Dow Jones. So it was one kind of small trend here. So it was a parallel, and then it broke through and went up. Okay, also it can easily pull back down. If it goes to this new trend, you can see there is kind of one wave, and at the moment it's second wave. Okay, so quite easily it can finish up around here. Okay, and maybe to do another one, or if it breaks through, it might go back to the same level where it was, or even lower to this situation. So that's what we can see from the index S&P 500. So it's quite middle territory, so it can go up, but also it can easily go down. And if it goes down about 10%, so don't be surprised on that. And Nasdaq is different. So if you can see, this line represents the trend, the resistance line of the trend from 2009, and we can see in February it's broke through. It tested 1, 2, 3 times already this level, and now it's start moving even higher. So it's kind of building up a new trend, and quite easily can go here. Okay, so to 6,400. Now remember that Nasdaq represents, like, it's include. There are quite few companies in tech industry, and when you look at tech companies, you realize that a lot of them now with a quite high PE ratio. Okay, but all of them, majority of them, have a future PE ratio lower, and that's why people invest in tech companies, because they believe it is a future. It's some kind of similar to 2000 when everyone believed that tech companies are the best. So, and a lot of people now put money into tech companies. Okay, that's what happened. But also it has like a possibility after it goes up, it can return back. So, and use this type of opportunity to get into positions. So don't buy when the indexes are all high. All right, that and the last one is VIX. VIX is volatility index or index of fear. So, and you can see sometimes it goes quite high, like here, and that's the best time to enter positions. When this index is high, it means the other indexes are low, so the prices are low. And the lower the VIX, the higher the index. And we can see that now for the last couple of weeks, yeah, VIX is quite low. It's lower than the normal low for them. Okay, and it tells us that at the moment it's like the riskiest moment of entry into position. People feel confident and they are buying a lot of stocks. That's why the volatility index is so low. So, and remember that for us, we buy on fear. We buy when people are afraid and they exit positions. So, okay, so the best thing is kind of would be around 14 or higher point. All right, so that's about indexes.